IMF bailout on track, but questions linger over Ghana's fiscal discipline. Also ahead on the program, Treasury bills lose shine as investors seek stability beyond inflation margins. What could be accounting for this? We'll find out shortly. And Business Focus is sponsored by Telecel as well as EcoBank. But every day people face different emergencies. Police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would want to remember. Star 770 hash. Yes, star 770 hash is a new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank. We'll turn our attention now to the currency, commodities market, as well as the T-bill front before we segue into our conversation for today. Well, on the currency market, the dollar currently will be bought from you at 10 cedis 79 pesos, sold to you at 10 cedis 80 pesos. The pound will be bought from you at 14 cedis 48 pesos, sold to you at 14 cedis 49 pesos. The euro will be bought from you at 12 cedis 58 pesos, sold to you at 12 cedis 59 pesos. But be guided that these figures will be much higher at a forex bureau near you. We'll bring you updates now from the currency market as well as the Treasury bill front to tell you how the stock market has been faring so far in terms of the international commodities. Well, cocoa currently is up by some $32. It's trading at $5,927 per ton. Gold is also up by over $94. It's trading at $4,346 per ounce. But crude oil is down marginally, just about 1%. It's trading at $60.61 per barrel. Now, we'll take you to the Treasury bill front. 91-day bill is going for 10.69%, 182-day bill going for 12.43%, and 364-day bill going for 12.90%. And we see that across the board, all of these are higher than inflation, sparking interesting dimensions on how the market will respond to this subsequently. But we do know that government still wasn't able to meet its targets on the market last week, undersubscribed by almost 50%. We'll be exploring all of that for you shortly after this break. This is Business Focus. Don't go anywhere. Welcome back. This is Business Focus here on TV3 with me, Michael Ogbodu. Just gone by were retirement tidbits from EcoBank, helping you to plan ahead of your retirement days. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would always want to remember: *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, funds transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will come to your rescue. So dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsor of Business Focus, as well as Telecel. Now, to our substantive conversation for the day, the Executive Board of the International Monetary Fund, IMF, is expected to meet in the first week of December 2025 to consider Ghana's fifth program review. This follows a staff-level agreement reached with Ghana in October, paving the way for a possible $380 million disbursement to the Bank of Ghana before mid-December.
Sources with knowledge of Ghana's IMF program in Washington say the upcoming board meeting in early December will allow sufficient time for the final staff report to be prepared for consideration. A crucial document, the government's audit report on arrears, is expected to be released later this week and will undergo scrutiny across various IMF departments before submission to IMF management. Once cleared, a date will be set for the executive board to assess Ghana's performance. If approved, Ghana will receive about $380 million under the fifth review, bringing total disbursements under the three-year program to nearly $2.8 billion since May 2023. Analysts say the board's approval will signal confidence in Ghana's economic reforms and strengthen investor sentiment. Government officials have also pledged to maintain fiscal discipline even after exiting the IMF program in May 2026, with discussions ongoing about subscribing to an IMF policy instrument to assure markets of continued stability. The IMF, meanwhile, has commended Ghana for progress in debt restructuring, fiscal consolidation, energy sector reforms, and financial sector resilience.
So that's a report on what government or the country should expect mid-December, hopefully, if the board of the IMF approves the final tranche. We do know that there are some issues that still have to be ironed out to get that approval, but at least if precedence is anything to go by, once we were able to secure the staff-level agreements, we are optimistic that as a country we will be able to secure the final tranche. And it's interesting that that money too will be coming in December, where we experience some level of depreciation. So how will all of that translate to the economy? Well, we have the experts joining us in studio today to discuss all of that. Thank you so much for your time, gentlemen. In studio with me is via Zoom, first of all, is Dr. Eric Boache-Yadom. He's a financial economist at the University of Professional Studies, UPSA. In studio is Joe Jackson, CEO of Delex Finance. And we hope to join us soon, John Ehua, CEO of the Association of Banks. Gentlemen, thank you so much for your time.
Thank you.
All right. I'll start with you, Mr. Jackson. How it looks like this government appears to be ticking a lot of the right boxes to have been able to secure the IMF agreement approval consistently since they took office. What is your assessment of their performance so far, especially from, since you wear two hats, from your finance expertise and the business community side too?
Well, good evening to your listeners and viewers. Listen, you have to give credit where credit is due. And at this moment, they are ticking all the right boxes.
Oh, you say?
Yes, they're ticking the right boxes. In soccer, we say you can only play the opponent who is in front of you, right? And there's no point talking about other scenarios. At this moment, the CD has appreciated. The IMF has given us a kudos sign, The investor confidence is returning. The rating agencies have lifted our rating slightly. There's more money coming in, hopefully before December, to even shore up our reserves and the CD. The inflation is down. Down to single digits. The interest rates are holding steady. There's nothing more you can say at the moment. As you say, they're ticking the right boxes. And so what we have to do is, one, to appreciate what they've done so far, and to say, we support you. Keep up the commitment to fiscal discipline. Keep up the commitment to doing the right thing. Keep up, and that's all we say to them. Keep it up. And don't fall prey to and there are multiple demands that are coming, right? For me, that's the main thing. And there are lots of demands. There are lots of pressures. The only thing is that we should remember that a scant 10 months ago, we were still in the doldrums. So we should appreciate what we have and take things easy.
Okay. So far, so good. However, you're still cautiously optimistic. Or you're expecting the government to, as much as possible, stay on the line?
Stay on track. And we're very cautiously optimistic because up to this moment, they're doing the right thing. So we say, stay. More vim. Keep doing the right things. Keep ticking the right boxes. Keep up the discipline. Keep up, especially the fiscal discipline. And let's move this nation forward.
Okay. I'll come back to you on staying on the path, because the government has announced a lot of interventions in that regard: the expenditure rationalization, revenue mobilization reforms, the debt sustainability strategies. Are these enough to keep us on this track that appears to have a lot of light at the end of the tunnel? I'll come back to you on that. But Dr. Bache Adam, so far so good, or where do you sit?
Yeah, thank you, Michael. I think the government, or the monetary policy team and the BOG have done creditably well in some areas, but other areas also reveal that more work needs to be done to bring this economy to some level of stability. Now, if we look at, I think since May, IMF report and World Bank report has consistently cautioned the Bank of Ghana in the excessive intervention of the FX market. So in August, the BOG decided to listen and to step back and to reduce its excessive intervention for market to determine exchange rate. And we all saw what started happening then. In September, the cedi in the West started weakening. Then the BOG announced that they need to intervene with about $1.15 billion. You see, it's just like asking a patient who is not fully recovered to walk out of the ward to the house and expect that the person will be able to survive. That is exactly where we find ourselves. That if the Bank of Ghana should listen to the advice from IMF, the cedi stability will be weakened. It shows that the fundamental question, or the fundamental structure of the Ghanaian economy, has not been addressed. And I can say, I've said it time and again, that not much has changed in terms of the structure of the Ghanaian economy. Yes, we are reporting a trade surplus, but it's extensively driven by commodities like gold and cocoa. The natural structure of an import-driven economy, we are still running it. And there's a extent to which monetary policy can sustain a country. You see, the monetary policies and the aggressiveness of the Bank of Ghana is supposed to take care of the economy whilst we wait for the fiscal side, especially addressing the structure of the Ghanaian economy, to set in. But as we can see, not much has changed. So the Bank of Ghana cannot take a back seat in terms of allowing the cedi price to be determined by the market. And we have done over 6 billion in terms of intervention. And I will repeat again that we are following the trajectory of countries like Turkey, countries like Japan, Egypt, in terms of the management of our exchange rate by excessively supporting it. We cannot say that the Bank of Ghana should sit and watch whilst the cedi weakens. Something needs to be done. So in the past years, previous government has done similar thing. For example, last year, I think the cedi intervention was around about total year was around less than $2 billion. But if before the year ends, we are in the excess of about $6 billion, then it means that we need to burn more of the dollar to be able to sustain our currency. You see, our reserve has gone up, largely because our general gold price have gone up. From December 2024, when we were doing around about 30.4 or 30.5 tons, our reserve was a little below 10 billion. So currently we are doing around 11 billion as our reserves. Gold price have gone up over 20 to close to about 30%. So generally we will say that, yes, we are building our reserve, but to know whether you are building your reserve in terms of your commodities, we will compare how much dollar we've burnt to sustain the cedi as compared to how much gold reserve that we've added. We've added about 6.7 tons, and we have also relatively supported the cedi with over 6 billion. So generally, we are burning more dollars to support the cedi that could have translated into the shoring up of our reserves. If we look at top 5 countries that have the highest reserve, Ghana 4th. The one that we are behind, I think it's South Africa. It has 124 tons of gold in its reserve, and we are talking about 27 tons. What it means is that we are not at a point where, if the challenges we faced some years ago, when it comes back, we will be able to survive. So in as much as I will commend the Bank of Ghana for what they've done, I think that we are expecting the government to also put in measures so that the cedi price can be determined by the market, not highly influenced by injection of dollars by the BOG.
So the governor of the central bank says this time around they are doing more of intermediation as against what was that you used earlier? Intervention. So basically, they are creating that enabling environment to ensure that there's forex circulating in the system. But let me bring in the CEO of the Ghana Association of Banks on this particular issue, on the issue of intermediation. For you as players in the banking space, what has been your dealings with the Bank of Ghana really on that particular part of intermediation so far? John, if you can. Okay, we can hear you now.
Yeah, thank you very much. What we've seen in the last couple of months, obviously there's been a little bit of change from the Bank of Ghana's approach to the market. We all know that during the peak of the crisis the country went through, when we witnessed significant depreciation of the currency, the then central bank introduced some measures that siphoned a lot of the forex supply from the banking system directly to Bank of Ghana, and that resulted in Bank of Ghana directly intermediating in the market, some, more or less using banks as just conduits to meet specific needs of clients directly. As banks, we strongly oppose that approach, and God being good, and the central bank now, the governor and his team now, having taken a second look at that policy, have now decided that direct intermediation by the central bank is not the best way to go, and that we should allow the transmission mechanism that is properly laid out to be done through the banking system, so that the banks become the face the facing agents to the market. And the central bank did not just begin by saying we are pumping $1.1 billion dollars to the market to the end of the year, just like that. They started by changing some underlying policies that also, to some extent, stifled the intermediation or transmission mechanism. The key one being the revision of the net open position, what I would say, the adjustment to the net open position. As you know, the long position, that is the position that enables banks to keep more dollars than they have, than the dollar liabilities that they have, which means they can buy dollar and hold on their balance sheet and waiting on market movements or price movements, and then decide to when to supply those dollars. That opportunity has been taken away because now the long position has been reduced from -5 +5 to 0, which means if you are a bank, you have to aim at squaring your balance sheet assets in dollars equal to assets in liabilities in dollars should be the same, over a period. This is measured over on a weekly basis, and we take an average for the week. So you can go long a few days, but obviously you don't have the capacity to hold currency for the long term. What this does is that when Bank of Ghana now supplies the dollar to the market, the banks will quickly then be looking for avenues for offloading the currency. And that is what we have seen as the direct transmission resulting from the announcement that the central bank made of the about 300 million weekly auctions that they promised the market. So we are very much in support of what the central bank is doing. At this stage, early days yet, but we've already seen the results. And if you are able to continue on the trajectory that we've been on for some time now, our view is that the currency will see some stability. And as we have said, time without number or measure, that what we are looking for is not currency appreciating to 5 cedis or depreciating to 18 cedis or 20 cedis. It is how do we plan with whatever level of volatility that we have. So what the market is looking for is stability. And if this policy helps to stabilize the currency over a longer period, then the market will definitely respond by also removing the pressures and the stresses within the market, which is fueled mostly by speculators taking advantage of the intermittent price differentials.
Okay, so you are happy with the interventions and the enabling environment the central bank has created, and some had argued in the past that the exchange rate was not a true reflection of what's happening on the grounds. Now, with this new information that you've introduced to us, would you say that what pertains on the market right now is a true reflection of the CD performance against the US dollar, in your assessment?
Yeah, I think, as I said, it's early days.
John, could you please lean back slightly so we don't lose your head? Thank you.
Price discovery is not a spot decision. It's you discover pricing over a period because a lot of variables must feed into the information that determines the price. So if the approach we have adopted now continues, we will then better have a good mechanism for discovering the actual price of our currency, which in my view will be in a couple of days or perhaps just a few weeks' time. We will better be able to determine whether the price we are trading at, because now it's the market that is determining the price. Hitherto, because the central bank's hand was deeply in the market, it was more or less like a bigger hand somewhere telling us where the price should go or not go. But now it's because the transmission is happening through the financial system, who are actually the agents who are supposed to transmit monetary policy. Once it is coming through us, and we are now using the forces of demand and supply to determine what the price should be, I'm sure it will not be too long before the market is better able to gauge where the real price point should be.
Okay.
Obviously, we don't have a fixed exchange rate regime, so we're not going to have a price that will be fixed over a period. But the oscillation will be within some manageable, should I say, buckets. We will not have up to 14, and then we come to 10, and then we go to 50. We will not have that.
Okay.
We will be managing it within some reasonable thresholds.
Thank you so much. Doc, so back to you, based on what Mr. Hua just told us. So now we are seeing that from what he's explaining to us, the central bank is doing more intermediation. That is without touching the reserves. as against the intervention it was doing in the past. Do you still stand by your position, or you think that the central bank should continue in the trajectory it's going now?
No, I'm not sure I mentioned that the central bank is burning its reserve. And what I said was the rate at which we're expecting the reserve to build up is not building up because we are focusing on using the funds or the money to sustain the to inject to support. You see, the central bank is trying its best to sustain the city, whether through the financial intermediaries or directly. What we expect is that we should be able to have sufficient dollars in the system through whether being export to be able to receive sufficient dollars, rather than coming from the angle of a certain good activities generating more dollars and bringing it either directly or through the banking system. The point that we need to address is, should this intervention minimize? Can the city survive? That is the underlying question. And if these interventions are reduced or the central bank withhold, we know that the city cannot survive. And last September taught us a lesson. So I am saying that we are expecting that the government should change the structure of the Ghanaian economy. Other than that, we always come back to this discussion.
Okay. Mr. Jackson, I don't know if you want to respond to any of the things he said. Where do you sit?
I sit in the space where, listen, some intervention will always be necessary. Now, like Mr. Johnny was said, you have to discover the price and then possibly come into the market to keep it around that price. Now, as he said, the price discovery is an ongoing process. And so we should give it, in this new regime where the central bank is operating through the banks, we should give them a bit more time to let us know where we're going. The key thing also is this, that the economy's structure is not going to be transformed in 10 months. That won't happen. Anybody who thinks that you can transform a whole economy's structure in 10 months is, I think, being either too optimistic about what is just possible, right? And that's why my attitude is that, yes, the economy needs to be transformed. We cannot stay where we are. The discipline and the fiscal discipline will take us this far, but eventually we have to transform. But that transformation will not have occurred over 10 months. In any case, it's taken us, 60 plus years, and we are still where we are. 10 months is a bit of a short time. There are other interventions that we are all watching to see how they will change the game. But in truth, I also don't think it is realistic to say in 10 months the structure would have been changed. The underlying challenges will always be there. But the discipline that has been kept has brought us some distance along the road. And as I said, at this moment, all the right boxes are being ticked.
Okay. Now, Doc, let me come back to you. So from where you sit, now inflation is at single digits, exchange rate relatively stable, at least year to date. The currency has appreciated at least by over 20% against the US dollar, one of the best performing currencies in the world. We also have policy rate dropping significantly at record rates. How do we sustain these gains that the government has made? And what will be your key expectations towards that?
Yes, I will come back to my point. I can understand Mr. Jackson's point that 10 months is too short a time for us to change the architecture that has been with us for over 60 years. But I'm expecting more of the commencement of policies like 24-hour economy and the agenda, the big push agenda being implemented. Because what I've seen in the structure of the Ghanaian economy is that when a new president comes, because of the optimism and the confidence we have, we achieve relatively good stability, especially in the first and second years, But the government usually fail to implement their key policies that will bring us a lasting stability. So if we don't see some of these policies kickstarting as early as possible, and we spend 2 years deciding on whether to implement, not to implement, the cyclical effect of some externalities or local challenges will even throw us off balance. That is the very premise I'm coming from. That how long is it too long, or how short is it too short? So I'm expecting that some policies, as in cutting the importation of chicken, rice, these are daily or regular staples that we import on daily basis, sugar, and all these things that we import on daily basis. When are the policies going to kickstart? When are we expecting them to hit the ground running? We have gone through a difficult moment as a country, and we wouldn't expect something like that to happen again. So I think the government should bear in mind that through the next pandemic happen, which we hope it doesn't, are we able to survive? Can we be able to be self-sufficient? Based on the challenges that we have, I don't think that 2 months is too short a time for us to know clear policy implementation guidelines, because monetary policies are short-term and they can only hold the economy up to a certain point. There's a certain point that monetary policy can no longer help, no matter how best they try. So we may, if those times come, I hope we don't get there, we may start blaming maybe the management of the Bank of Ghana, but it may not necessarily be their problem or their fault. They might have done their best. So I am expecting that the policies will kick in and the government will start rolling out as early as possible, especially things that we import daily. Things that if we look at the Ghana, our importation structure, one of the things we import very high is equipment. So is it the case that we will encourage more local assembling plants in Ghana so that we can buy those equipment, whether vehicles, machineries, we can assemble them in Ghana here, that we will rather buy them in CD rather than changing the dollar to buy them. So some of these policies, I think that we can easily implement them, and we should not wait for too long a time.
Okay. So you are saying that history has taught us that things could go wrong. So why not start right now and prepare for the rainy day? Fair point. Mr. Hua, for you as Association of Banks, what would be your expectation from government, especially in sustaining these gains, so that you have the enabling environment to continue to do your business?
Yeah, I would say we've been here before. And I always use the example. I don't know how true that is, but I'm told that South Korea went through an IMF program once. And what they said to themselves, because of the difficulties that the conditionalities had on the economy and on its people, they resolved and said, never again are we going back to IMF. And since then, they've never gone to IMF. The rest is history, and we know where South Korea is now. In Ghana, this is our 17th time. In fact, when we took the last one, it didn't take us more than 5 years to return to IMF. So when we see the white boys around the table, our decision-making is different. And when they leave the table, we know where the decision-making goes. It is the strength of our resilience. To what extent are we prepared to go through some challenges in order to correct the fabric of the economy, the structure of the economy? If we tackle the structure of the economy, things will not be rosy in the beginning. But are we prepared as a country? Do we want to be, you, me, Mr. Jackson on the call, and our prof, are we prepared to be the generation that suffers for the next generation and the generation yet unborn to benefit? If we are, then we should start with our political leaders. that some of the decisions they have to take will not be popular decisions. That is the only way you can change and reorganize the structure of the economy. Else, once the programs upon programs kick in from next year, when there is no, I call them white boy on the table, I'm telling you, if we are not careful, we will be running amok again, and that is where the danger lies. We all hope it never happens. There has been clear demonstration of discipline. The fiscal discipline is clear, and you can see, you can actually feel it. Now we have strong monetary hand that is also holding the fort. And I perfectly agree that you cannot use monetary policy to correct an economy. It is both the monetary and the fiscal must work together to balance. It's a balance sheet. What we had before was that the monetary policy before, 2022, 2023 onwards coming, we had a monetary policy that was overcompensating for the flaws in the fiscal economy. So when they were strictly going by the Keynesian theory of fight money supply, fight this, tighten that, keep a tight monetary policy, the fiscal was losing ground by overspending and the like. We need to take the bull by the horn. There are programs in this country that this country cannot afford. Why are we paying school fees for first years? Who complained? That is money we can use for something developmental. Why are we paying teachers and nurses when even those who have completed the program, we cannot even absorb them into the structure to earn salaries? Why are we paying people? If years ago we were not getting teachers, now we are paying people to go to teacher training because years ago we did that to attract people into the teaching profession. Now those who have qualified, they have their certificate, they don't have schools to teach. Why are we paying nurses to go to nursing school? When private nurses are all over the place, they can't even get posting. And today, we say we are adding private schools to a free education. We are a poor country that has endless pocket for socialism. I do not think that's what this country needs. This country, we need to do the hard work. There are hard liftings.
Okay.
Those hard liftings, let me just land on this. Those hard liftings will sometimes can create some unpopularity, but it will solve the country. But one key thing is this free education. Obviously, there are people who need free education, a lot of people. But there's a mechanism available now that we can implement, and then we get those who really need it. A few will fall through the cracks, but those who need it will get it. And those of us who can pay, we pay. We are not a rich country to be giving free boarding education. No way.
Fair point.
So we take the bull by the horn and do what is necessary.
Yeah.
I'm telling you, we'll continue, and then we'll come back to this drawing board where somebody from IMF will come and tell us, do this, don't do that, do this, don't do that.
Fair point. Thank you so much there, Mr. John Ehua. This is Business Focus here on TV3 with me, Michael Ogbodu, and my guests are still here with us. We'll go for a quick break. When we come back, we'll continue with our second topic. Stay with us. Welcome back to Business Focus here on TV3 with me, Michael Ogbodu. Now, to our next topic. Government of Ghana's latest Treasury bill auction on October 17, 2025 saw a significant undersubscription, with the government raising only a fraction of its funding targets, according to the results of the auction. The government had targeted a total of 6.578 billion cedis across the 91-day bill, 182-day and 364-day bill. Mr. Well, I'll come straight to you on this. Last week, we saw an uptick. There were 2 weeks before they didn't meet their targets. Where are you, banks and investors, putting your money now? Because it looks like you're not interested in the Treasury bills anymore.
Yeah, obviously, if you see this trend, we should ask ourselves the question, where is it going? And we have seen, if you have been monitoring the media space, you would have heard or perhaps seen on TV or other social media platforms that banks aggressively, advertising, various loan products and reduction in interest rates and the like, attracting households and businesses to come for loans. So I think it's a positive development. Obviously, I'm not sure the Minister of Finance will be very happy if you come to the market and you're not getting what you actually need. But this trend started not today. Since August to date, we have had 12 auctions. 8 of them have been under subscription, and just 4 have been oversubscribed. And if you look at the trend of over the subscription, it normally happens when the auction is either the week 1 of the ensuing month or maybe just around the week 1, which it tells you a story. That is the period when there is liquidity. The pension funds have received pension payments, and they are looking for avenues for those funds. So the fact that we had this under subscription at this time of the year, this time of the month, when we are now going to the salary pay round, where individuals who want to invest may now think about investing, you will find that it follows a kind of a trend of, normally around this period, the subscription rate goes down. But the bigger picture is that it's not just the banks, it's individuals, it's households, is the pension funds, the business community, and the cash flow cycle. The fact that once the economy is correcting itself, rates are low, the yields on the T-bills are very low. Obviously, investors will be looking for other avenues, and as banks, the other avenue that is available will be to look for risky assets or risk assets and channel these funds over there. Okay. But we need to also understand that the T-bill, particularly when it comes to the banks, is not just as an investment vehicle. It is also a liquidity management tool. As banks, we have various liquidity benchmarks that we have to meet. And depending on where a bank stands on the liquidity threshold, they may or may decide go into the market, even if the rates are very high. Okay.
Mr. Jackson, I'm sure you're happy to hear things like, because it means that the private sector is getting the needed monies to grow your businesses. Is that the case?
It is the case. And again, you got to look at it this way. One of the results of being successful in driving down T-bill rates is that T-bills are not as attractive as they used to be, which is a good thing. So that means that for institutions and individuals, they are exploring other ways of creating assets and utilizing their liquidity than just going into T-bills. And remember also that the country is generally in a more optimistic view of businesses and of the economy and of where we are going. And once that is, so people are prepared to invest. People are prepared to take a little bit more risk. So really, in a sense, the undersubscription is a result of the government being successful at what it is trying to project. And because of the liquidity cycle that Mr. Ewa just talked about, the fact that it is when there are funds, you see an oversubscription. When there are funds, you see an undersubscription. It is, I think what is going on shouldn't scare anyone yet. In any case, some of us are of the view that it is time now, given the discipline that we have, for the government to try and raise more money outside the shores of Ghana.
You're saying they should return to the capital market?
Yes.
Now is the time?
It's time to start thinking about it and do something about it. Because remember that every time the government is taking all its money out of the local market, that is crowding out some business that needs money. So you've got to balance the two issues. Bring some money from outside so that there's a little bit more money available for those inside. Especially now that you say, let's invest in the 24-hour economy. Let's invest in this country. Let's create more businesses. You got to go.
Thank you so much, Mr. Joe Jackson. That'll be all for today's edition of Business Focus here on TV3. But let me say a big thank you to my guest, Dr. Eric Boakye-Yardom, financial economist from the University of Professional Studies, Accra, John Ehua, the CEO of the Ghana Association of Banks and financial analyst and CEO of Daylex Finance, Joe Jackson. Thank you so much, gentlemen, for your time. That'll be all for today's edition of the show. For more business stories, please visit our website. It's 3news.com/business. My name is Michael Ogbodu. Thank you for watching. Catch you same time next week.
Business Focus is brought to you by EcoBank, Telecel,